Eu gostaria de anunciar agora a nossa próxima sessão, que tem como tema Emerging Trends in Crypto and New Opportunities in the Digital Currency Landscape. Para falar sobre esse tema, eu convido ao palco a Head de Cripto para a América Latina e Caribe da Visa, Catalina Tobar.
Buenos dias. Bom dia. Eu quero pensar que eu falo português, mas eu falo portunhol. Assim que preferi dar esta palestra em inglês, não em espanhol. Assim que vou mudar para o inglês. Como falaram, desculpa, I am Catalina Tobar, and as I was introduced, I lead crypto initiatives for Visa in Latin America and the Caribbean. I am part of the global crypto team at Visa, a team that was created back in 2018, and a team that is dedicated to understanding, discovering, learning the opportunities that crypto, and more broadly, blockchain, has to bring not only for Visa, but for the payments ecosystems as a whole. However, we are not the only ones that touch crypto at Visa. There are more than hundreds of people globally and in every region of the world that touch Visa in a way or another. Multifunctional teams from finance to risk, compliance, and marketing that are talking and dealing with crypto in a way or another. What is important is that crypto and blockchain is no longer a foreign concept within the walls of Visa. We have invested a lot of time and effort educating ourselves, learning what the technology has to bring, and also helping our clients understand what their journey should be in crypto and blockchain. What Visa wants to do in crypto is actually, in general, it's making sure that we can enable any credible money movement flow, whether that flow happens on our own network, VisaNet, or whether it happens on another one, beyond. And that is the case of crypto and blockchain. Actually, crypto is one of the best examples of Visa's network of network strategy, where what we want to do is bridge all of these technologies, blockchain networks, crypto platforms, and connect them to our network of more than 80 million merchants and 15,000 financial institutions around the globe. When people think about crypto, however, they think about crypto assets, including my mom. If you ask my mom, she thinks I work on Bitcoin. And at Visa, we do not have a view on the price on any particular asset. What we are here to do is really trying to understand, to see the innovation that blockchain is bringing to our industry. So what I would like to do today is spending a little time sharing some of the most relevant trends that, in our view, are shaping up the digital currency landscape. So I have decided to group the trends that I'll be sharing with you today around the implications and applications of blockchain tokens into three major groups. The first one, blockchain as a new computing platform. The second one, a new global payments network. And the third one, a digital form factor for assets and fiats. So let's get started. So we see blockchain as a new technological platform. And we see there are two major technological opportunities that they bring. The first one is blockchain networks as a whole. Blockchains are a distributed ledger with multiple participants where every participant is allowed to write on top of it. But no single participant can fully run it, cannot declare full ownership of the network. And the second one is our tokens. Tokens are code that represent ownership of an asset, which is recorded over the blockchain network. Over blockchain networks, participants can demonstrate ownership and can exchange these different tokens. There are two kinds of tokens. There are fungible tokens, like Bitcoin, or like dollar representations of in crypto that could be interchanged easily between one another. And there are non-fungible tokens, unique tokens that demonstrate ownership of a unique asset, like a piece of art, like real estate. So we believe that these two are great elements that have the potential to potentially change the world that finance is conducted today. So even though it's very early in the journey of blockchain, and we are still probably years away from seeing massive consumer adoption, what we look at is at this chart. These are the number of developers that are working on blockchain technology, on crypto projects, on different applications, different solutions. And this number, irrespective of the ups and downs of the industry, continues to grow at a steady rate. And for those of us that work in blockchain technology and know the difficulty of finding a blockchain engineer, we know the value that these, whenever we see development, we can expect growth. We can expect innovation. We can expect new business models to come. And something that is very unique about blockchain technology is that the source code is open. Anybody can access the code that is available in the blockchain networks. That nowadays, actually coupled with AI, brings an important leap. The speed at which innovation is expected to come can be expected to be accelerated. That is called composability. Composability is what allows these developers to actually tap into public libraries of smart contracts where they can leverage decentralized applications and develop on top of them. Back in the day, when developers were developing apps, they had to start from scratch, from zero, and actually develop every single feature from the bottoms up. Nowadays, they have the possibility of leveraging what's already available and build on top of that. So again, why is this important? Because we believe, again, that many of these innovations are going to drive financial systems and payments specifically. So definitely, there's a lot to come. Oh, and I'm sorry. I was supposed to be showing this chart. These are the number of developers. Now, moving on, as I mentioned, we believe it's early in the blockchain era. But we think that blockchain is undergoing what could be compared to when the internet, when it went through the broadband era. Back in the day, when internet went from the transition to dial-up to broadband, we saw a great improvement in connectivity. Nowadays, the blockchain ecosystem is investing a lot of time and effort in making sure that blockchain networks are faster and more reliable. What ultimately that's going to drive its new applications. It's new solutions that, as they become not only cheaper, faster, and more secure, are going to start to drive that adoption from both businesses and from consumers. So again, we can expect a lot of innovation to come. Now, when we talk about high-performance networks and the availability that it has for developers, it has paved the perfect path for developers to start working and develop new cost-effective solutions that provide seamless experiences for consumers. They have allowed to develop better and enhanced products, as we can see here. We have seen leaps both in cost, in times of processing, and many of these developments are actually a result of the existence of layer 2 solutions. We have core solutions, right, core networks, and we have layer 2 solutions that allow to add that additional flexibility that is instilling into the system these possibilities of becoming better and faster. And ultimately, it's also driving competition. And we know what happens when we have a lot of competition. New business models are continuing to come. Ultimately, today, we can see that it's driving consumer adoptions, consumers that are depositing their tokens into the network as a demonstration of trust and investment. So definitely, we can continue to expect, and as we can see, more improvements to come. Then, I am going to move on to crypto wallets. Crypto wallets are the door to enter the Web3. They are the vehicle that authenticate me as a user and that help me enter the Web3 world. They are the vehicle to connect with consumers. They are driving my consumer experience. And what we have seen is a steady growth, not only in the number of crypto wallets, as we have here, from 2013 to 2023, where we have close to 92 million crypto wallets registered, but an increased number of consumers. We are seeing use cases around NFTs, around stable coins, around gaming solutions. They are all demonstrations of how wallets continue to drive that consumer adoption. The number of transactionality of applications and blockchain has grown at an approximate rate of 207% year over year. So we can see that the demand is there. People are continuing to adopt these solutions. However, today, when we talk about and we think about digital wallets, they do not have the possibility to talk to one another easily. They are closed-loop solutions that have problems talking to one another. Blockchain has the possibility of being that common database that drives the possibility to actually have wallets from different networks talk to one another, to drive that interoperability and really add the next layer of dynamicity into the digital wallet ecosystem. So as wallets have the possibility to interoperate, consumers have better possibilities to trade between one another, to do exchanges between one another, and this ultimately offers them the possibility of having better access to financial services and conduct payments today. So definitely, this is an incredible opportunity to shaping up the ecosystem. As an example, for example, I don't know how many of you are familiar with PUSD. PUSD is the stable coin from PayPal, powered by Paxos. PayPal, a closed loop, is actually driving wallet interoperability, as users of PayPal can now connect, send money to Mercado Pago users in certain countries in Latin America. So what effectively is happening is that PUSD is enabling that wallet interoperability. But most importantly, what is happening is that the barriers to enter are going down. Now, more and more, given this technology, competition is going to continue to increase, right? Then, moving on to the next trend, there are stablecoins. And stablecoins are one of the largest contributions of blockchain technology and one of the most used solutions in this space today. What I'm referring today about stablecoins, there are different kinds of stablecoins. Stablecoins basically represent another asset on-chain. More specifically, I'm going to be referring to fiat-backed stablecoins, representations of currency on-chain. And nowadays, when we talk about stablecoin, the most common one is the representation of the US dollar. However, more and more, we are starting to see more currencies being represented on-chain. The euro has come up, and definitely more and more currencies are starting to come. And they are effectively being used by consumers. Today, I am going to share 3 use cases. There are certainly many more, but I think that these 3 are key, especially for us in the world of payments. So the first one is cross-border transfers. So today, conducting a cross-border transfer takes time and it's costly. And this is driven primarily by the number of intermediaries that are involved in the process, among other things, but primarily because of that. With a stablecoin, via my crypto wallet and an internet connection, I live in the United States, I can easily send funds to my mom in Colombia at internet speed. I am conducting a cross-border transaction immediately, an instant payment in seconds. The second one has to do with stability. And, for us, Latin Americans is not, a foreign concept to imagine living in a country where, one of the 80 countries where inflation exceeds 10%. When your money can lose value on a daily basis. When your life savings could deteriorate on a daily basis. With stablecoins, consumers can easily swap their fiat into stablecoins and hedge against that risk. Have the possibility to shield their money, their savings, and do not be subject to the volatility of the domestic currency, especially relevant in countries with hyperinflation. And then the third one has to do with settlement. And when I talk about settlement here, I mean by settlement, a transaction being complete by all the parties that are involved in the process. Today, settlement can take days. With blockchain technology, with stablecoins, a transaction can be completed in real time once the terms for each party, by leveraging smart contracts, can be concluded once all terms are fulfilled for everybody. The transaction is cleared and settled immediately for all participants involved. This has tremendous implications on time, but also on cost of processing. And that is also being enabled by stablecoins today. So what we see here, these are the monthly stablecoin transactions in millions. This shows that effectively stablecoins are being used. This shows especially stablecoins as representation of fiat on-chain, what are effectively doing is converting the blockchain into a payments network. They are effectively moving money. With over 19 million users, 141 billion in circulating supply, and 1.35 trillion, it's not a mistake, trillion of stablecoin volume, we are definitely seeing as evidence that stablecoins are driving money movement. They are driving the mobility of funds. A lot of this is explained by B2B payments, by B2B volume. Stablecoins are allowing companies to authorize, clear, and settle transactions in a cost-effective way in a real-time fashion. So moving on to the next trend, right? We talked about private stablecoins, stablecoins issued by private parties. There's also governments. Governments have been exploring the potential benefits of CBDCs for quite some time now. Today, 93% of central banks are engaged in a CBDC development. Brazil definitely being one of the ones that is ahead of the game in this exploration journey. Why are central banks exploring CBDCs? To try to understand what are the potential benefits from operational efficiencies, how can they drive innovation and upgrade the current payment and financial system infrastructure that in certain governments is lagging. So really finding these as a new way to drive innovation. Again, the journey is still early. Only a few have launched globally, but a significant number is either piloting, doing proofs of concepts, or doing research around them. And then finally, I talked about private stablecoins. Stablecoins issued by private parties, like Circle, like Paxos. Private entities that are taking assets and they are defining their own reserve mechanisms to ensure that they provide that trust to consumers, but they are not regulated. Regulation varies depending on the market they are, the market they operate, right? And then on the far right, I talked about central banks, the regulator, the entity driving monetary policy in each country, trying to find a way on how to drive efficiencies, whereas that is via a wholesale CBDC targeted to financial institutions for settlement purposes, which is the case of Brazil, or a retail CBDC geared towards consumers to drive use cases at the retail level, which is the case of China. And then we have commercial banks in the middle of both. Private regulated entities, also exploring the benefits of the blockchain, bringing their assets on chain, deposits and liabilities, having the possibility of having a fraction of their balance sheet reserved on chain, and ultimately exploring also the benefits that the blockchain could bring. They have a tremendous value, as I have mentioned, because they are in the intersection between the private and a regulated entity. They have the possibility to really drive stablecoin usage, really, because it's nothing different. A tokenized deposit is nothing different than a stablecoin. It's another representation of a stablecoin. It's backed up by another asset, but abiding by the regulation that they should abide by, making sure that the reserves are in compliance, making sure that consumers are KYC'd. So definitely they have an immense role, which it's explained what you have here. It are some examples of some commercial banks that have explored, that are exploring different opportunities in the tokenized world, in the tokenization of deposits. So many of you may have heard JP Morgan is a pioneer dating back from 2020 with their Onyx network. But we have started to see, starting in 2022, a continuous number of increased entities that have augmented, increased since the second half of 2022 and going into 2023. A lot of exploration is happening in the commercial space as well. Some relevant cases to note are, for example, the Regulated Liability Network, which is a protocol for regulated entities, and actually their view is that it should have regulator participation as well, where they are looking to launch a unique token, a US dollar-backed token, to explore different kinds of use cases on this multi-entity distributed ledger technology. So again, a lot of exploration, a lot of activity around the spectrum of participant in the financial system. But what use cases? What are they trying to explore? So some of the use cases that we see that leverage tokenization of deposits include, for instance, tokenized cash. This is where stable coins, deposits, and CBDCs take place. They have the possibilities of merging the benefits of the blockchain, the instantaneity, the real-time capabilities of trading immediately with the value of currency. That makes it a great vehicle for cross-border payments. With a tokenized deposit, you can effectively conduct a cross-border payment and settle directly. The second one has to do with debt instruments, and it has opportunities for the debt market. Imagine that, today the debt market is not easily accessible for every single consumer. Imagine that you take a bond and you split it into a small fraction so that an increased number of consumers would have the possibility to purchase it. It would add liquidity. It would bring new pools of money that could have access to this market. In addition, debt markets could benefit from the transparency that blockchain technology adheres by itself, adding a lot of, sorry for the duplication, but transparency and traceability into the bond issuance and bond trading. The third, and fairly similar, equity instruments. There are certain high-value stocks that are not accessible for the average consumer. By fractioning the token version of a stock, we can also open up the market to an increased number of consumers whom otherwise would not have the possibility to participate. But also, it would offer the possibility of increasing flexibility into the trading space. Because today, when you're trading stocks, you're typically restricted to certain timelines, certain schedules during which trading entities participate. So ultimately, you could be not only creating new customers, but adding flexibility. And then the last one, assets and commodities. As I mentioned, a token can represent any asset. Some of these assets include, for instance, real estate or natural resources or even pieces of art. Many of them have very high ticket values, and they are not easily accessible for everybody. The fractionalization allows for you to have a fractional ownership over a broader asset, right? And not only would it grant you access, drive liquidity for these markets that are even more illiquid than certain stock and debt markets, but also granting the flexibility to cash in or cash out, to enter and exit with flexibility. These are some of the benefits that actually programmability, that smart contracts actually provide into the world of tokenization of assets. So, in sum, some of the opportunities that come from tokenization come from the operational efficiencies that programmability brings, replicating the roles, or streamlining more than replicating, making more efficient the roles of different participants in these supply chains, such as banks, such as trustees, such as all the different participants in a given network. Second, as I mentioned repeatedly, adding liquidity, bringing more money pools, which make markets more efficient and ultimately more accessible to everybody, which leads to accessibility. As you have the possibility to distribute, to market better tokenized assets, you create accessibility, ultimately driving opportunities for new participants to enter, new marketplaces. Imagine having access to different stocks and markets in digital marketplaces. So accessibility plays a key role that ultimately drives or has the opportunity to bring evolution to the capital market and definitely innovation in financial products. Then I would like to briefly share with you what are some of the things that Visa is working on today. I mentioned to you that Visa started back in 2018. That's when we first launched our first crypto-linked program, when we first bridged the world of crypto to the world of fiat via a credential. As a consumer of a crypto wallet, a crypto exchange, I can leverage my credential and transparently to me, make a purchase in fiat while burning my crypto asset. That was the first use case that we found for Visa connecting the two worlds. Then the second one, moving to acceptance, making sure that I can leverage my credentials to on-ramp, to purchase crypto assets directly. Then we also hear from a myriad of our clients, what should I do in crypto? Should I start issuing one of those credentials? We've been helping our clients navigate their role in crypto and blockchain, understanding what is their strategies that are individual to each financial institutions, and to which also doing nothing is a strategy, as long as you make an educated decision. So we've also played a role on that journey. And then internally, moving on to number 4, really trying to include the potential benefits of blockchain into our own performance. We are exploring stablecoin solutions as settlement vehicles for our own clients, offering them alternatives on-chain. And finally, we've been working with central banks and private clients globally in their role, in their journey around tokenized assets. So starting with acceptance, as you know, we go to our clients very often. These 70% is a reflection of a survey where consumers said they would prefer to use their debit card over an instant transfer, over an ACH transaction to top in to buy their crypto wallets. We have over 4.2 billion credentials being used globally to tap into the world, offering an alternative that leverages what we've been working on for years, minimizing risk, offering tools to better manage these transactions, and introducing, for instance, rules for chargebacks. These would not be accomplished if we didn't have a group of partner enablers, certain acquirers and PSPs that are part of our enablement network and that help us enable these merchant categories, these crypto merchants categories, to be able to leverage their credentials for what is referred to in crypto as the on-ramp. Secondly, we have what is called the off-ramp. In crypto, they change the names for everything. It's nothing that cash in, cash out. This is the cash out. This is the credentials. We have over 65 crypto wallet partners globally. As I mentioned, the credential allows to have access to our more than 80 million merchant locations. We have over 1 million active credentials, crypto-linked credentials globally, which makes us one of the world's largest payment networks. We help our clients at the bottom and ultimately helping the consumer. For the consumer is absolutely transparent. They just know that with their credential, they can go to whatever merchant, and they can tap into their crypto assets to make day-to-day transactions. As I have mentioned, we are also seeking to incorporate the benefits of blockchain, and digital currency settlement capabilities is one of them. As I briefly mentioned, we are offering our clients the possibility to settle on-chain. Have issuers offer the possibility of depositing their settlement dues to us directly on-chain, specifically in USDC. And similar, we offer acquirers the possibility to settle to them our dues in USDC on-chain. For issuers, this presents the possibility to lower processing costs, the potential to reduce collateral requirements, as certain efficiencies that I have mentioned before could be applicable to our processes as well, and also reduce decryption for crypto natives. Typically, crypto natives have to have some liquidity in crypto and liquidity on fiat, and that drives a lot of friction. Offering the possibility of doing everything on chain definitely brings or reduces the friction significantly. And then on the acquirer side, we are hearing acquirers are offering directly to merchants the possibility to receive payments in different crypto payments, a majority or a significant chunk in stablecoin. What we offer in this case is increase their merchant cash flow, have the possibility of them pushing those funds easier to customers, and also reducing the friction, as they would be sourcing directly from us on-chain so that it's easier for them to also maintain these crypto balances as a source would be coming from us. So definitely a treasury solution that could bring tremendous opportunities for issuers and acquirers, and a solution that we are exploring selectively in certain markets in Latin America. Then, moving on to CBDC, some of you know that we've been very active in the space, as we've been investing a lot of time and effort in Brazil specifically. These are some of the public engagements that we can share. So in Singapore, it started back in 2021. We were the winners of the Singapore Hackathon, where it was a CBDC challenge, and back in the day, we explored a concept of our CBDC payments module. Then Brazil, as I mentioned, Brazil is a market that is of critical importance to us, because we see the work that Brazil is doing at the forefront in the global innovation landscape. We have participated in the LEAF Challenge back in 2022, where we actually replicated an end-to-end use case in the agricultural space, where we tested the concepts of interoperability, programmability, and offline payments. And now we are participants along with one of our financial institutional partners, XP, participating in the current DEX project and really looking forward on what's coming next. We also participated in the last quarter of 2023 in the Hong Kong Monetary Authority pilot, where alongside with two bank partners, we brought to life two use cases, an interbank transfer, and also the trade of a real estate property, all on-chain, and also backed up by CBDC. And then last, Kazakhstan recently launched a CBDC, more a retail solution, where with our, similar to what we do with our crypto partners, we are linking a credential so that consumers can easily tap the CBDC for day-to-day purchases and at any of our merchant locations. So what is it that we are doing? We are developing cutting-edge standards for digital currency ecosystems. We are exploring products and solutions, in this particular case, crypto-native solutions, under 6 key pillars: tokenization, offering a platform that allows our clients to easily mint, burn, and transfer their assets on-chain via our own platform. Scalability, understanding the importance that resiliency, that processing high volume transactions has in the payment ecosystem, making sure that we instill those same concepts into the world of blockchain. Making sure that we address privacy and security. We've been processing encrypted transactions for years. How can we do that in the blockchain in a secure fashion? Abiding by not only global standards, but also by domestic standards and regulations. Every country has their own flavor of what data privacy security has. Brazil has its own, Europe has its own. Identity, understanding the role of identity and identity solutions. And ultimately, these two pillars, and like framing everything else. Programmability, making sure that through smart contracts, we can bring to life different kinds of use cases, and interoperability. As if you recall from my previous slides, there are many exploring different use cases, different networks. We envision a world with multiple networks, but ultimately what's important is driving that interoperability, making sure that they can be interconnected, following the right standards, doing it securely, doing it privately. So that's all that I had for you today. Thank you for having me here. I hope to be back soon. Goodbye.